Down the day's action on Dalal Street, and Indian markets, they ended the final trading session of the week with deep cuts. In fact, Nifty has ended very close to its record, very close to its intraday lows, and it was a pretty much an interesting session. We opened with marginal cuts, and it looked like the market was pretty much ignoring the global headwinds that were coming our way. US CPI on Wednesday came once again hotter than expectations. The CPI figure for the month of March was at an 11-month high, and actually that's a core CPI. The CPI, the headline number, was at a 6-month high, and that really was actually the expectations were the market would correct post that, but that was not the case. The markets did pretty much ignored the cause. We were trading just around with marginal cuts this morning, but in fact, even Nifty managed to claim 22,700 at one point in time, and looked like that we were completely ignoring the global headwinds that were coming our way. But again, once we were not able to capture that 22,700 mark on Nifty, the profit taking started, and by noon we had in fact broken below key support levels on Nifty. In fact, if you look at the weekly performance of Nifty overall, in just one single session, Nifty managed to wipe out all of its gains in the previous 3 sessions and ended pretty much on a flattish note on a week-on-week basis. It has formed a shooting star pattern, which, by the way, if it appears in an uptrend, it's a bearish reversal signal. So overall, the texture of the market does look like it is favoring the bear slightly, but again, it's still a wait and watch mode, because we have rallied significantly from since May 20th actually. In fact, if you look at Nifty, it has managed to gain about 1,000 points since May 20. So just in a couple of weeks we have rallied by about 1,000 points. Nifty Bank has rallied by about 3,000 points. The mid cap and the small cap indices, I mean, look at the recovery there. Just when March had begun, we were talking about this froth building up in the system, and both indices gave up almost 10% each. In fact, the small cap index fell as much as 15%. But not only after March 20th, March 14th actually, when the sentiment was at its weakest, not only were we able to reverse all those losses, we actually got to record highs, and at least on mid cap index, even today we got to record high level, but the small cap index also by the way came within touching distance of its record high. But overall, we saw a reversal from there on, and both indices also ended with cuts of about 0.5% in today's trade. But one of the key factors that we obviously track is Nifty Bank, because it has a very high weightage on the Nifty pack on the whole, and that was down about 500 points in the last couple of days, and we have actually and that was one of the main reasons why perhaps we saw this big correction in Nifty. But to understand where we go from here on, let's also bring on board Mr. Santosh Meena of Swastika Investmart. Santosh, thank you for joining us here on News9. Good to see you after a long time. And what are you making of the markets today? It seemed like we were for the longest of time ignoring the global headwinds coming our way, but Nifty finally gave in on a week basis. We have formed a shooting star pattern, which is a reversal signal, and we are back at that 22,500 zone, a level where we have spent a lot of time in the last couple of weeks. What's your take, sir?
Yes. So I was also surprised today, because I was expecting like today's dip to be a buying opportunity, because I was looking at the data from the FIs, so they were bullish on the derivative. They have turned net buyer after a long time. Generally, they started their long positions in derivative market, then they turn bullish on cash market, and on last trading session they heavily bought in cash market as well. So I was thinking today's dip should be a buying opportunity, because our structure was comparatively better to global market. But surprisingly, market ended at low point of the day. But still, Bank Nifty is showing comparatively strength. So I want to see follow up in the market. If market falls below, Nifty fall below 22,500, then we can expect some move towards 22,300, which will be 20-day moving average. So my view is still bullish until we fall below 22,300. So let's see, wait for the follow up of today's move. And if market bounce back from here, then again Bank Nifty can lead from here. If it manages to sustain above the 49,000 mark, there is a high probability then we can see the 50,000 mark in coming days.
And Santosh, right as we are chatting, the numbers for TCS have come out and they are looking, rather in line with what the street was expecting. Profit for the quarter came in at around 12,502 crore, which is about a 12% surge on a quarter-on-quarter basis. In the last quarter, it stood at around 11,097 crore. Revenue from the operations came in slightly below the expectations. That comes in at 61,237 crore, which is up 1.07% compared to 60,583 crore in the previous quarter. EBIT, which is earnings before interest and tax, that figure jumped by about 7%, in fact over 7%, coming in at 15,918 crore versus 14,829 crore in the December quarter. And margin jumped ahead of what the street was expecting. Street was expecting just a marginal uptick in the EBIT margin, but that comes in at around 26% versus 25% in the previous quarter, so a 100 basis point jump. But Santosh, coming to you on the stock, the numbers are out for TCS. The numbers are pretty much in line with what we are expecting. Next week we'll have Wipro and Infosys, and HCL Tech the week after. But between the two IT giants, TCS and Infosys, what do you prefer? I mean, Infosys has been underperformer over multiple time frames. Compared to not only just TCS but other bellwethers as well. Do you expect that Infosys could perhaps play a catch-up rally, or do you think TCS will continue its outperformance vis-a-vis Infosys, that is?
Yes, if I look at the TCS first, so numbers are mostly in line, or there is no negative or positive surprise. Option data also indicating similar pattern, because if you look at the data between bulls and bears at 4,000 marks, so might be we may see muted reaction on Monday in this counter. But if Infosys is looking interesting, because after a sharp correction, variable, it is fighting with its 200-day moving average. So let's see if it manages to hold this 200-day moving average around, which is around 1470, 1460 level. Then we can expect a buying. If there is any minor positive surprise from the earnings, we can expect a short covering move towards 1600 level. So definitely risk reward is favorable in the Infosys, but yes, it has to hold this 200-day moving average, which is currently around 1470 mark.
All right, and among the bellwethers particularly, I mean, what do you prefer, sir? We have Wipro and HCL Tech as well. Do you expect, because HCL Tech has been one of the stocks which has delivered returns comparable to the mid-cap IT names. It's up closer to 40% or so in the last 1 year. Do you see HCL Tech to continue doing well? And what's your take on Wipro as well? Because, interesting times it's been through. We have seen a change in management once again. Mr. Delaporte has stepped down as a CEO of the company, and the stock was doing fairly well in the last 2-3 months, but again the underperformance has begun once again for Wipro.
If I look at the technical structure of the both counters, so not very encouraging in both counters, because there is a rounding top of formation in both HCL Tech and Wipro, and today Wipro closed below its 100-day moving average, so there is a risk to fall towards 450, 440 kind of level. So any dip towards 450 kind of level will be a good buying opportunity in Wipro, because I don't think there will be much downside from current level. HCL Tech will be interesting, because what I believe most of the time the technical patterns fail. Bearish technical patterns fails in this counter, and any positive surprise can again lead a positive momentum, because it was one of the counter which was outperforming for last many months. So I believe I prefer HCL Tech to compare to Wipro, because fundamentally and technically as well, most of the time any bearish pattern fails, it again witnesses a sharp move. So I'm expecting a buying around 1500 level. Any bounce back from here, we can see upside towards 1670, 1700 kind of level.
All right, and that's the view on the IT pack pretty much on the whole. TCS has, remember, come out with its Q4 results. We'll have Wipro and Infosys that will come out with its numbers next week, also over the weekend. The next weekend we have Persistent, and the week after HCL Tech will report it will report its fourth quarter numbers. But another stock that was in the news today, Santosh, was Godfrey Phillips. I mean, the company has decided to exit its retail business, which is run under the brand name 24/7. Now, the tobacco manufacturer currently draws about 9 to 10% of its revenue from its retail operations. The rest, by the way, comes from the tobacco operations. So it looks like that the company going forward will be a pure play tobacco company. I mean, the street has reacted rather positively to the news. The stock did jump about 7% after the report came out. However, after that initial knee-jerk reaction, it fell about 5% and settled, somewhere with a cut of about 1.5% for the day. But overall, Santosh, coming back to the stock, it has been a wealth creator over the last 1 year, has rallied over 70%. And I think the investors are cheering the exit from the 24/7 businesses because it was a loss-making business for the company. And now going forward, there is more clarity and the direction. It's like it's going to be a pure play tobacco company. What's your view on Godfrey Phillips, sir?
Yes, if we look at the chart of the Godfrey Phillips, so it has entered into a consolidation phase after a vertical rise from January 2024 around 21 from the 2100 level. It rallied to 3700 kind of level. So after that, it is showing some kind of correction and consolidation. So I believe it may see some more consolidation in the range of for say 3000 to 3600. It may spend some more time for maybe next 3 months. So once it will come out this range, we may see again buying momentum. So it may remain sideways in the range of 3000 to 3600 for time being.
All right, and Santosh, the markets are rather choppy in the last 1 week or so. We are entering the earnings season, also global headwinds that have started to play a part in our markets as well. So at a time like this, I think the approach, of course, will be stock specific. So what's on your radar, sir, for the short term?
Okay, so I will start with the heavyweight Reliance industry. It is consolidating about its 20-day moving average and it is likely to form a cup and handle formation. And once it will broke about 3020 level, I am expecting a fresh bullish momentum towards 3100 kind of level. So by Reliance industry, stop loss should be 2900, target will be 3100. And I'm seeing April month is all about commodity. We have seen big rally in gold, silver, metals, and related stocks like metal stock. Now, another like chemical and API related stocks are also participating. So Divis Lab will be my pick from the API space. Stop loss should be 3700. Target will be 4000. Deepak Nitrite from the chemical space. There is a strong breakout. 2500 is an immediate target. 2260 should be a stop loss. From the metal space, sale again is just showing a strong bullish momentum. Once it will come out from F&O band, we will see a strong buying momentum for the target of 170. Stop loss would be 145. And the counter Petronet coming out of from 5 years of consolidation. So I'm expecting an immediate target of 333 to 97 should be a stop loss.
All right, those are the top trading ideas from Santosh Meena. An interesting pick in Reliance. I mean, that has been a big mover for the markets, but quite a bit of choppiness we have seen in the counter. One day it moves 1%, the market moves higher. One day it falls 1% and the market crashes. So an interesting pick over there altogether, but those are the short-term trading ideas from Santosh Meena. Sir, thank you for giving us time here on News9. Always great insights from you.
Thank you.
But with that, it's a wrap on this edition of Last Check. Thank you for watching.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.